All right, good evening and welcome to tonight's stream. I'm excited to be joined by Dan Beck from 401 Go. What we're going to do is we're going to talk about crypto and your K. So what this is we're going to talk a little bit about the mechanics behind cryptocurrency in the 401k, what's been happening in the market. We're going to talk about some future prospects that we see. What we're not going to do, we're not going to make market calls. This is not going to be a Bitcoin 101 or anything like that. We'll get through our disclosures. This is not any specific tax, legal, or investment advice. We're just purely want to address this kind of in a group setting. So we're going live on the YouTube channel, in the Facebook group 401k and beyond, just because we've been getting these questions for plan participants. How do I access it? When is it going to be available? How should I do that? So I'll let Dan introduce himself, and away we'll go.
Thank you. Yeah, excited to be here. So obviously this is a topic that I'm very interested in. First and foremost, I'm one of the co-founders and CEO of 401 Go. Kind of our focus is on really providing a 401k solution for small to medium-sized businesses. And the reason that we're focused there is because there's a lot of opportunity in the fact that most small businesses, over 85% of them, don't offer a 401k. And the reason for that is because they're complex, they can be messy to set up, and they can be very expensive. And we have built a full stack technology platform to really overcome all of those challenges. And that's exactly what we've done with 401 Go. So and then where the crypto comes into it is me personally. I'm a huge advocate of not necessarily just cryptocurrency, but blockchain and the underlying technology and everything else as a whole. And yes, that does encompass, cryptocurrency, Bitcoin, all of that. So it's an extremely fascinating space. And I feel that, it will continue to, advance into the mainstream, economy globally here, in the US as well. And I want to make sure that we're, I think it's also a great way to encourage, participation in 401k plans. So, it's something that's of interest to me personally, as well as us as a company at 401 Go.
And I think so, just a little bit of 401k 101, as you might have some curiosities around Dan and I and our roles and relationships. So you'll typically have a record-keeping platform. So think of that as technology. That's where participants are logging in to check their account balances and process transactions. And then you might have an advisor who works with the business owner to set up the plan, and then work with the individuals to help them set up their accounts and choose the investments for them. So Dan, he's got a bunch of other advisors that he works with, and I can work with other record keepers too, but we do work together on some projects. So that's, I guess, our other additional disclosure, that there's no sort of, issue there with that. So, and the way I look at crypto is, I've been in this business for a while, and we've dealt with sector funds when they first came out, right? So originally it was like, how do I get more technology in my 401k plan? And then it was, how do I get more real estate? And then there's a gold bugs. How do I add a gold bug, and how do I add gold fund in my plan? So that was always something that came up. There's always somebody in those 401k meetings in the back of the room who wants something a little bit more than is on the list. So we always tell them, first of all, take a look under the hood, what you have right now, right? So you have that S&P 500 fund. You're going to have real estate, have some in there to begin with. And then look at what you have potentially on the outside. You have some old IRAs that maybe you could, do something different with outside the plan. So when Dan and I spoke earlier, that was part of it too, is how do we express to participants that the 401k isn't just the whole end all be all to your financial wellness. How do you sort of make that the foundation and build around that, right?
Yeah, exactly. And I think that's really what it comes down to is, my feeling is it makes a lot of sense that, I think investment options and platforms and technology and everything that's happening, like, the short squeezes that we saw, earlier this year, and, like there's a lot of fascinating things happening that shows that just kind of the overall landscape and who's being involved in investing. Yet, even in private equity, I think that there's a lot of changes from a legislative standpoint that have made private equity something that was very reserved for for financial elites, available to the mainstream public. And so I think these things are they're exciting. And I think more than anything, it really shows that unless you're really planning on spending a lot of time understanding and acknowledging and learning these things, that's really where having an advisor that can guide you through this is absolutely necessary. To the extent that having an advisor with your 401k plan, talk to that advisor. If you're at a company that has a 401k plan, that advisor's there to serve you and to help you with that 401k plan in particular. But I guarantee they're going to help you with other aspects of your life should you reach out to them. So it's imperative to have that. And I think that I look at what's happening in kind of the investment space and the way things are moving, and I think it's smart that 401ks and 401k providers and the platforms and everything move a little bit slower. And the reason for that is for the simple fact that these are people's retirement savings, and obviously we need to make sure they're very secure, and I think having a healthy dose of risk aversion is beneficial from kind of just an overall platform and the industry as a whole. And so I think that's why you're seeing that in other some sectors of the market, things like Bitcoin, and some of these other potential investments, private equity, whatnot, are a little bit more mainstream. But in 401ks, they're not, or they're pretty much non-existent at this point. I think that's actually good. So with that being said, we fully intend within the next short time period to have some sort of a blockchain cryptocurrency offering as an investment. It'll likely be an ETF so that it has the diversification and everything else. And we're just really trying to understand what's the best way that we do that. So I think it's for us, it has more to do with the fact that we want to give people a reason to log in and participate in the 401k. Instead of giving them like fun 10 really boring funds to choose from, or some target dates and then maybe a stable value, and leave it up to them to determine what's best. We want to give them SRIs, ESG funds. So those are like impact investing, socially responsible investments. So we want to give them those opportunities so that when they are offered the 401k at work, instead of being like, oh well, what I'm being offered doesn't make sense to me, they're like, no, I like this. I like that I can go in and have a little bit of exposure to cryptocurrency. And so for us, we're just trying to determine right now, particularly with cryptocurrency or blockchain assets, what's the best way to allow exposure to that, but do it in a way that is beneficial for somebody that likely doesn't have the financial sophistication to truly understand the A to Z of what they're getting into, and how do we kind of create some guide rails to keep people safe and keep their investments safe.
Right. And I think that's what's most important to us, because we were always concerned about when somebody asks for something to be added to the lineup, and then as an advisor, when you make a change to the investment lineup, it almost creates some sort of urgency that says, wow, my advisors just added this to the lineup. That's almost like a default, kind of recommendation that, wow, he or she wouldn't have gone through this to add this to the lineup if it wasn't a good investment for me. Yeah. So I think, you mentioned a couple things there. Target date funds. At what point do we see a target date fund suite? Add a little bit of crypto in there. That might be a little while. And then, self-directed brokerage accounts has always been sort of a way to access this. I can have mixed feelings on that. It depends on the group that we're working with and the sophistication of the employee population. But so we've got a Canadian ETF, right, that trades Bitcoin now, and it trades a couple different share classes available. That came out in February of this year. What are your thoughts, Dan, on when we're going to get one through the SEC here in the U.S.?
I mean, I've been saying, I think it's soon. Like, we'll see something within the next 12 months, and I think I've been saying that for probably like the last 3 years. So,
right,
it's just kind of an indication that I'm very bullish on kind of that sector as a whole. But what we've seen is numerous attempts, and early on, these were oftentimes fund companies that most people haven't heard of.
Hmm.
But now when it's the Goldman Sachs and it's the Vanguards and it's like these large fund providers that are saying we want to do this, and they're soliciting the SEC for approval, and the SEC is coming up with very creative ways of denying those approvals, they're going to run out of those. And so that's kind of
Right.
what I'm seeing is and at the same time, what it's doing is it's kind of educating the sector as a whole what the SEC is looking for. And I think that with these repeated attempts, at some point, it's going to happen, and I'm going to again say it's probably the next year. So
Yeah.
let's check
Yeah.
in 3 years and see if I was still right. So
Right.
so yeah, it could. I mean, it could happen tomorrow, quite honestly. And I know there's a lot of people that kind of have this feeling of, Bitcoin is used for illicit transactions, and the government hates it, and the government's terrified and
Mhm.
scared of it, and everything else. But when you think of like let's look at the instruments that we have now. What's the one that's oftentimes the most problematic across the board? That's cash. It's like cold hard cash. That's what's
Yeah.
buying
Right.
illegal weapons. That's what's buying drugs. That's what's hiring people for hits and everything else. And honestly, I feel like if the government had a choice of here are the currency options, and one of them is some sort of blockchain or cryptocurrency, and the other one's cash, the government
Hmm.
would prefer to get rid of cash. Because at least and they're like, oh well, cryptocurrency and all these things, it's secret. And no, that's actually the opposite of what it really is. It's a public ledger. And so and that's why if you look recently, the FBI has gotten very good and creative at figuring out and tracking down some of these transactions. And so it's anonymous to a degree, but as soon as they can connect one of these anonymous IDs, like a wallet address, or a blockchain transaction, which is again on a public ledger, with a particular individual, now they can follow every transaction that ever moved through that wallet or those IDs, and build a brilliant case that they never could in the past. And so the same thing that they say makes this difficult and creates some anonymity and solicits this being used for illegal activity, is actually a far larger benefit for the government. If the government could keep track of every time a dollar bill was passed and from where it went, they'd love to do that. Money is serialized. There's a reason for that. They do track it to some degree, but not to the granularity that is possible with blockchain assets. And so I think a lot of these arguments, they're just old wives' tales that maybe at some point back in the Silk Road days, yeah, there was a lot of illicit activity, but now there's I think the general consensus is it's less than 1%. So it has now far more legitimacy, and it's being used in very creative ways, especially in economies that are very underbanked and don't have access to as many banking options as we have now. And so for me, I see all the potential that it has. And the really fascinating thing about it as well is it hasn't stopped with just a currency. It's not just some alternative to a fiat currency like the dollar or the yen or whatever it may be. It's that these kind of early adopters and everybody that that believes in it the way that I do are working hard, and they're developing DeFi or decentralized finance. And so in the market, you're aware of market makers and how they provide liquidity and how they make everything function better. And at the same time, those market makers, they're centralized. There's some downsides to it. It can cause some problems as well, which we've seen in the past. Well, guess what? In cryptocurrency, they have their own version of these market makers as well. They have their own Fed, if you will, or kind of their own fiscal policies and ways of controlling, the amount of currency. And so it's very fascinating to see a lot of what has been built, in the global economy, and what's worked well for, kind of localized and global economies, and how kind of that tech community and the blockchain community has basically rebuild a lot of these things in a way that I feel can propel us further in the future and provide more democratization, more access to banking, more visibility, transparency, trust, and everything else. So there's a lot of really amazing benefits that are happening right now. But at the same time, like, I have done some currency transactions, and I, again, this is something that I've been doing for 5 or so years, and I'm very involved in it at multiple levels. I've taken courses from MIT on blockchain. So for me, it's something that I've studied a lot, and I'm certainly not a newbie in it. And but I've lost money sending, currency from one wallet to another wallet just due to something, stupid as using the wrong type of token or the wrong type of transfer. Fortunately, I've been able to recover it. So again, 3 years ago, that wasn't even possible. And they've built tools to be able to recover some of those transactions. But it still is the Wild West. Like you can lose money just doing something as simple as a transfer. So it is something that, needs to be approached with an abundance of caution. And again, for me, the reason that I'm in it is not purely speculative. It's not because I'm expecting, this to fund to fund a Ferrari or a yacht or something like that. It's because I'm curious about it, and I love the technology, and I love blockchain and everything that's underlying, and the way that I learn about something and the way that I get excited and active in something is by doing it. And the way that I got involved in this was going out and buying my first cryptocurrency, which evolved into how does mining work? Let me try mining. How does this work? Let me try DeFi. And so that's what we're trying to provide, is that option within the 401k, because again, if we can do that in the 401k, we can take people that are, likely never going to participate in a 401k plan. So if you look at the statistics and you see that, as a whole, 401ks are being underutilized by lower wage earners and people that are underbanked, that don't have financial advisors, that aren't setting up a Betterment account, that aren't going out and trading alternative assets, or, engaging in a lot of these things that are, generally perceived as, positive financial behaviors that are going to lead to good outcomes at retirement. If we can attract them to the 401k using something like cryptocurrency or whatever, it's a win. Like, right. So that's why I'm so excited about it and trying to find out how, we can incorporate that into the 401k. And that's the tricky part is, it's like, if I had my druthers, we would have done this a lot sooner, but obviously there's a lot of legal and compliance and things that we need to go through, which I think is wise. Like, I'm glad that we're doing that. But the sooner we can do that, I think, I'm excited to see what will happen and what will happen to user behavior in particular.
Right. And I'm really excited about the fact that it gets participants excited, like you said, right? I mean, we talk about ESG and new avenues like that. So sometimes I'll be in front of a group and, half of them will be asleep usually, right? So, but you might mention something like ESG and it sort of wakes them up a little bit and says, oh, you know what? I kind of thought Wall Street was a scam, or I didn't want to get involved in the stock market, but now that there's some, environmentally and socially conscious funds in our lineup, maybe I can invest in that, and that'll get me excited about it. So, where it relates back to, blockchain and Bitcoin, cryptocurrencies, if that's what gets people excited about their account or their portfolio or participating in the plan, even if it's, 2 to 10% of their portfolio, if that's what gets them to participate, that's what can start to drive engagement and starts to drive participation and drives these employees to say, hey, boss, why don't we have a 401k plan here? So what if we've only got 5 employees? We should still be doing this, So if they can drive that excitement to get them to participate and drive that upward, that's ultimately a good thing all around.
Yeah. Well, and the thing too is, this was, we started working on 401go, several years ago. And, early on, we kind of had this hypothesis, if you will, that, because I feel like there's a little bit of, maybe there's some misconceptions that millennial investors and some of these newer, that are not interested in a 401k, and that's something that they don't really care about. And my response has been, no, they're just not interested in the 401k that their dad had. They want something that, is more designed for the way that they live their lives, and the fact that employees now don't go and work at a company for 20 to 30 years and then maybe another one for another 10 to 20 or whatever it may be, that right now they're changing jobs about every 3 years on average. And so what that signals is that we're in a very different job market, and the way that people are kind of approaching careers, and the fact that a majority of people have some sort of like side income, whether that's like a little eBay thing or Etsy shop or whatever it may be. Like, a lot of people have a side gig at one point in their life. A lot of people set out, there's the gig economy, there's all these things that have really changed the way that we work and the way that we earn our income. But the 401k really hasn't. And a lot of the administration and the rules that go into it and the investments and everything else are the same things that have been really in place for 20 plus years. So our focus is on like, to us, we saw this as an opportunity not to just automate something that, and I'm not saying that 401ks are broken, because they're not. I mean, they work really well, but the problem is, if you look at the data, you see that they work really well for, honestly, a segment of the population that without the 401k, they'd probably be okay anyways. These are, oftentimes higher wage earners that are going to, regardless of whether they had a 401k at work, they probably have a financial advisor that's helping them prepare for retirement. And so we're looking at, and the nice thing is, this was just an idea, several years ago. But the data that we have now, and looking at the user behavior and everything else, proves that our thesis was right. And so, when you look at the industry average for, and again, our focus is on small businesses. So, like our average is, it's like a 20-person company, and that's like not even, you go talk to a lot of the other, bigger providers, and that's not even something they would begin a conversation with. And so, but when you do look at the numbers of like those smaller employers or whatever, the participation rates are, it's about 34%, is kind of the industry average. For us, we're about 68 to 70%. So we're doing very well. And to me, that shows that a lot of these assumptions that we've made, there's some truth to them, and that we are going in, we're moving in the right direction. And for us, we're still saying that's not good enough. Like, we can do better than that. And the other thing too that's exciting is, when you look at our data as well, we see that, number one, our demographics, as in terms of participants and people that are using these 401k plans, and the employees that are enrolled in our platform, tend to skew, good 5 to 7 years younger than the industry average. And so what we're finding is that a lot of times the companies that are adopting, a 401k plan for their company, tend to be, have more millennial employees and everything like that. And so we're a really good fit. And that's where, our focus is not necessarily on, and that's where, if you wanted to set up a 401k and be able to invest in real estate and alternative assets and cryptocurrency and gold and private equity or whatever, there's companies that will accommodate that. And our goal isn't to do that or provide alternative asset investments, because again, I think that tends to favor more of, those financial investors and the individuals that don't need as much help. And so most of what we're doing in our platform really revolves around, kind of this, we are always asking ourselves, how does this impact that, employee that maybe got their first job, right out of high school, they just turned 18, they're eligible for, a small business that would never before would have even had a 401k. Now they've got a 401k plan, and this is a kid that's making, $15 an hour, and he finds out that he can do the 401k, and he's like, wow, this is cool. He doesn't even understand what a 401k is. This is going to be his first experience of saving for retirement. And if we can build positive behaviors, through our platform, in cooperation with advisors that can come in and serve these small, businesses, and provide them with access where they never would have gone out and done this on their own, then, we're fixing the problem before, somebody's at like 55 or 60 and going, wait, I need to prepare for retirement. What's happening to Social Security? So for us, again, it's an ounce of prevention is worth a pound of cure. If we can get them, those lower wage earners, and we can get them engaged at an early age. And I've seen this numerous times. One of the first companies that we put on was actually a business that, that I owned. And I had a number of, warehouse employees that were making that, $12 to $15 an hour. And I thought for sure, first thing they were going to do is opt out. Well, we had auto enrollment on, which I think is an amazing feature. And it was, and all the notifications went out. They were aware of everything that was going on, but it was about 2 weeks afterward. For some of it was actually like a month or so after these started coming out of their paycheck. So they came and they said, what's this like 401k thing? And there's like $20 coming out of my paycheck. And I said, oh, well, that's the 401k. And I kind of explained it to them and let them know what that meant. And a lot of them were like, well, I'm probably going to opt out of that. And I was like, okay, there's an email that explains how to do that. It's super easy. You can do it from your phone or whatever. Not a single one opted out. They're like, wow. Yeah, it's $20. I don't miss it. And I've had a few that have kind of come back to, visit and just say, hey, how are things going? Like good, long-term employees. And we have, friendships beyond just that employer-employee relationship. And they've told me before, they're like, this is really cool. I left it in there, and it was $300 when I left, and it's like now $450 or whatever. Like, this is amazing. And so it gets them excited. And these are kids that, like I said, they're in their early 20s, and they're saving for retirement. Like, to me, that means that we've had an impact, and some of the ways that we've done that are through just giving them better options.
Right. Yeah, and that's a common occurrence where a lot of times a business owner will make those assumptions for their employees and say, no, they don't want to participate, or I know what they make, they don't have it. But one of the things we talked about earlier was the idea of the gig economy and so many people doing other things. As a business owner, you don't necessarily know what your employees are doing the rest of their day or what they're doing on the weekend. And, we had a situation here locally, same sort of thing. The, business owner I know very well and said, I don't think my people are going to be into it. And we did the enrollments, and one of the employees signed up to put away 50% of his paycheck. So the HR person reached out to me and said, I think he wrote this down wrong or didn't understand. Can you reach out to him? I said, yeah, sure. Go bring him in the office. And he said, nope, I know exactly what I'm doing. He said, I work another job. That's my spending money. I go to school at night. I pay for that in cash. My car's good. I have no debt. I understand the 401k. My other job doesn't have one. So I'm going to put away this half of my paycheck, and I live at home with my parents, and this is what I'm going to do. Yeah, the whole thing mapped out better than most of my retirees who run this kind of stuff. But that's that same sort of thing. The idea of the business owner had no idea that he was going to school or where he lived or any of that sort of stuff. So you can never make those sort of assumptions. And again, if adding crypto or having that conversation is something that gets that person involved, all the better. Absolutely.
Well, and
we do have a.
Yeah, go ahead.
Yeah, go ahead. No, I was just going to talk, just going back to the idea of getting an ETF and up and running and all of that sort of stuff. So the new SEC chairperson, we've got somebody in there now, and he comes from that world, right? The commodities future trading. So that's gaining some momentum. They thought that, having a new SEC person in there might sort of move this along. So I think as soon as we get that, I think that'll be the kind of the watershed moment. Then that will allow, the target date funds or advisors who put together these models to be able to control that, because that's what we want, right? We don't want to just put it out there as an investment option and have somebody put 100% of their portfolio in it. That's what we want to make it available, to a certain extent, but not where they can go all in on it.
Yeah. Well, and like I've been, obviously we, 401go, we're a fintech solution, but I think the big differentiator between us and a lot of other, kind of fintech competitors is that, you oftentimes find that there's people that believe, okay, kind of the way that we've been doing it for a long time, the legacy systems, the relationship-based distribution of using advisors and everything else, like that's the gold standard. And then you have some of these other, disruptors that tend to be, individuals more like me that are very bullish on technology and very futuristic and believe in a lot of digital first, kind of disruption. And, honestly, I think that was kind of our instinct moving into building 401go, but then we quickly realized that, and a lot of this comes from just experience being a small business owner myself, was that, no, a lot of business is done through relationships. In fact, the majority of business is done through relationships. And the other thing too that we quickly discovered was that, when you're a large company, so like a 300-person company with a 401k plan, oftentimes there's a firm involved, and there might be, one or two advisors that work with that 401k plan, and they'll go do enrollment meetings, and they'll go have, an annual meeting or whatever. And they certainly make themselves available, to those 300 employees. But the actual utilization of that advisor by those employees is almost zero. What we found instead is in small businesses, the impact and the role of the advisor actually has, a lot bigger overall effect for those employees than it does in a larger company. And so for us, what we realized is that, our focus on small businesses, our focus on, kind of really the underbanked and the under, those who aren't saving for retirement, that having an advisor that can go in, to a 20-person company and say, hey, Dan, I noticed you haven't enrolled in the 401k. Why not? Or,
right.
Hey, Joe, I see you're saving 50% in your 401k. that's awesome. Like, let's talk about what else you can do. And
Mhm.
so the impact of, and so I'm always very, like, we're very careful about how do we incorporate tech as well as that touch element. And so, keeping that in mind, like, as we started to contemplate, like, cryptocurrency and everything, the first thing that I did is I started reaching out to a handful of advisors, as I did you, and said, what are your thoughts on this? And my initial reaction was they were going to say, heck no, no way, like, stay away from it. This is dangerous. But I was shocked that almost every single one said, I think it's a, something that we should seriously consider, and I think it's a good idea. And I was kind of, I was like, well, why do you say that? And almost every advisor said, I have had probably more than half of my clients ask me about this and ask me about how they can gain exposure to it. And, if we can do that in kind of what I want to say, like the safe haven of a 401k plan, where, we have the ability to put a lot more kind of, rules and boundaries to help them, get that exposure, but get it in a way that's not going to, blow up their financial future. Or the last thing we want to happen is for them to put 100% of it into Bitcoin and then have Bitcoin vanish or something terrible happen.
Mhm.
And they go, oh, that sucks, I'm never going to invest anything more in my life and retirement,
Yeah.
and ruin those saving behaviors for that individual. So for us, we have to approach it very delicately, but we made sure that we understood how advisors felt about this. And I think the general consensus is, yes, let's give them exposure to it, so that it creates that excitement, it gets them on. But how do we do it in a way that also it makes it safe? And that's one of the ways that we can do that.
Yeah, I agree with all of that. Absolutely. I was going to ask you a question too.
Yeah.
Curious about blockchain, as a technology, obviously, which the crypto's built on. Record keeping is a technology business. That's the business you're in. So how do you see blockchain technology working its way into the 401k record keeping business, which is notoriously an old, stuffy sort of insurance-based business?
Yeah, I mean, we honestly, at least me, I thought a lot about that, because you do find, so like DeFi, for example, that's decentralized finance, where you have automated market makers, you can do lending, you can do, like, there's a lot that's happening in, there's loans that are being issued, there's exchanges, there's Forex. I mean, all these things that exist now exist in the DeFi space as well. And essentially those DeFi platforms they're like banks. The difference is they have that inherent trust, because with it being a public ledger, it's like if I transfer some money from, my JP Morgan Chase account to your Wells Fargo account or whatever, I'm reliant on JP Morgan to tell me what really happened and what my balance is, and who controls all that data, who controls that database. They do, a corporation. Now we have to have trust in that corporation, because it's their ledger, it's their system. And if somehow, like, honestly, I guarantee this, and I know that even me, who's very, I would say that I watch finances probably more than the average average American. So I tend to be very aware of these types of things. But I guarantee if some hacker got into my bank system and did something that siphoned off a few dollars here or there, I wouldn't notice it ever, honestly, because you have all these transactions happening. And so I'm 100% reliant on the bank and their security and their systems and their database and their technology, and I have no way of verifying that. Now, the whole concept behind a public ledger is it's out in the open. If I say Daniel Beck, or really in kind of like crypto terms, it's a big long string of numbers and some text. If this transferred funds over here, well, that's part of the public ledger. Everybody has validated that. The way that the system works makes sure that it maintains the integrity of that ledger, and maintains that kind of public database, if you will. And so because of that, that's the inherent trust. It's the visibility, it's the transparency. It's not that some organization has control of a database and I'm reliant on whatever data they give me. So to me, I think that it makes a lot of sense, but at the same time, I don't think it's necessary, and I think it's far from necessary. And if anything, kind of our overall determination was it's a novelty more than anything at this point. I think in the future, there's a lot of technologies, and especially markets and systems and places where it is 100% just the underlying blockchain technology is the best approach. So
Mhm.
reviews, like Amazon reviews, even like at one point, those were kind of the gold standard of determining if a product was good or bad. It was like, go to Amazon. Like if you're in Walmart ready to buy something, you're like, I wonder if this is going to break. Let's see if it's on Amazon. If you go on
Yeah.
Amazon, I'd say good 10 years ago, like they had a really good review platform. But since then, you had a lot of these Chinese sellers and other people that are, very creative, go in and figure out ways to game the system, and that destroys the trust in those reviews.
Mhm.
And so Amazon tries to respond by going through and censoring things, but then all of a sudden what happens is you've got manipulation, you have a centralized authority controlling these reviews. And what happens when Amazon has their own product on there? Well, are they putting the same types of controls on their own products as they are on everybody else's? Probably not. But what it really boils down to is I have no way of determining that because they control all the data. And so at that point, like, the value of those reviews and the trust in those reviews diminishes significantly. And so just that transparency alone, I think, is the biggest reason why blockchain makes sense in a lot of situations. And reviews is just one of them. So there's many others. And looking at like in that MIT course, we did case studies on Walmart and GE and a lot of these large organizations that were experimenting with blockchain. And I'd say 9 times out of 10, they were implementing blockchain where it didn't really need to be implemented. It's like within Walmart's internal organization, do they need that trust and transparency? No. So if they have an internal database that's tracking produce and they're the only ones that are really using that, and they decide let's turn it into a blockchain, system, like they get no benefit from it. So there's a lot of bad utilization of blockchain technology. But I think it's good that it's happening because we're learning where it applies and where it doesn't. And I kind of liken it to the early .com era where, you had people that were creating, a digital or web version of everything. There was, it's like, I walked my pet today and that was really fun. How do I create a website or a digital version of that experience?
Yeah.
And it doesn't make sense in some situations. And at the same time, a lot of stuff that we enjoy now wasn't even a concept back in 2000 or the late 90s when we kind of went through that period. And that's what's going to happen now. There's thousands of tokens and blockchain implementations, and there's a good dozen that are going to be the Amazon, the Teslas, and the Apples and the Googles that of a decade from now or 5 years from now. And what's going to happen is there's going to be a shakeup, and there's going to be a lot of people that lose a lot of money, and but that's the way it's going to evolve.
Yeah. The crowd that's out there right now that's really into Bitcoin and other cryptocurrencies, how much overlap do you think there is between that and the ESG crowd? Is it two separate camps, or do you think it's a lot of the same people?
I'd say for the most part, they're two separate camps. But at the same time, I see that because a lot of time with ESG, there's definitely a very environmental focus for the most part. That tends to be kind of the largest component when we look at it as people's desires for like ESG type funds is number one, it's environmental. And then it's the other, the social and the governance and whatnot. But, a lot of people see blockchain and as, kind of a negative effect to the overall environment just because of the amount of power that's required to do Bitcoin mining. And that's only particular to certain currencies and certain, some of these blockchains have found ways of still, kind of providing that same public ledger benefit and those same mining and everything else that you have with Bitcoin. So essentially the same function, but they've done it in a way that doesn't, require massive amounts of power. They use it through proof of stake versus proof of work. So it's already been addressed, but that doesn't mean that there still isn't already now today a big environmental impact because of Bitcoin mining operations. At the same time, the cryptocurrency community comes out and says, well, wait a minute, if you look at the power that's being used by the vast majority of these Bitcoin miners and the cryptocurrency space, it's almost all renewable energy. And the reason for that is because renewable energy is a lot less expensive. So hydroelectric is far less expensive than oil that has to be transported across the globe and go through a refinement process and finally get burned, or coal that has to be mined and everything like that. And so because there's so much more demand for these renewable energy sources, well, the power producers are putting more emphasis on trying to find ways, rivers that previously, or areas where, previously they wouldn't consider exploiting hydroelectric, they're now exploiting hydroelectric and wind and solar and everything else. And so, I don't know, and I think it's hard to say, what the end effect is going to be, but there certainly is an environmental impact. But I'd say for the most part, the people that are really bullish on, crypto and whatnot tend to be more futurists, and I'm certain they care about the environment, but they care about it less than they do the underlying technology. And then you have the people that are just like, I want to make as much money as I can, and I've heard Bitcoin's the way to do that. So I'm going to invest there. And those people certainly don't care about ESGs, because oftentimes when you're in an ESG, you're saying I'm willing to sacrifice a little bit of return to make sure that I'm investing in things that that matter to me, or have a positive impact beyond just the services that the companies that I'm investing in provide. So, to me, I think that there's a little bit of overlap, but I would never try to figure out how I can marry ESG along with, Bitcoin ETF,
Right.
or something of that nature. But the nice thing is, if you have a 401(k) plan, just go in and get a little bit of ESG and get a little bit of, blockchain technology, and you can essentially do that, or E-Trade, or anything for that matter.
Yeah. And one of the things we talked about before, the access to cryptocurrency. So it's still, even though it's getting more accessible, there's still a process that you have to go through to open an account and get used to, using Coinbase and things like that. That's different than just opening a Schwab account or opening up a TD.
Yeah.
And for the most part, I think we're sort of in agreement that that's a good thing, right? Because it's going to filter out some of the people just by general laziness, for lack of a better word. If there's too many steps or too much involved, it's going to shake out some of the weekend. So having access to it in the 401(k), do you think that's going to be? Do you think that increased level of accessibility is going to be a good thing for those people, or would you rather have some more curbs in place to, if you are going to use that, go through a couple more clicks of disclosure and things like that?
So I think most likely our approach is going to be, kind of a hybrid approach, where what we would do is permit, some degree. So let's say maybe, 5% or a limited amount of exposure to whatever, cryptocurrency assets that we determine make sense in a 401(k) plan. And let them know that, hey, should you want to invest up to 10% or something, some other threshold, like, here's some financial education that you can go through. And so it's a way for us to, and at the same time, if people are like, no, I don't want to do that, well, those are the same individuals that aren't going to go through the KYC process and the validation and all those barriers that get you to the point, even on something as accessible as Coinbase, into buying whatever that first, Bitcoin, Ethereum, whatever it is that you're getting. And so to me, it's kind of like, it's not a problem. Like, we're not going to do that for ESG. We're not going to do that for, anything else. But for blockchain, we're most likely going to require them to go through some process to make sure that they have at least some level of education to understand what it is they're doing, to ungate a little bit more exposure to crypto. And again, I don't know exactly how that's going to work, but again, we try to think in terms of, like, the nice thing about the industry that we're in is, yes, there's a lot of new things that we're doing, and there's a lot of, disruption at technology and automation and administrative levels. But at the same time, like, when we're looking at user behaviors, when we're looking at how do we influence user behaviors and how should we, work with participants, we have decades of experience we can draw on, and that's relationships that you have with individuals. And I would say, Brian, how would you, consult somebody that is, young 20-something that wants some exposure to 401(k) and to crypto, and you're saying, I don't think it's a good idea, but they're insistent they want access to it. How would you give them access to it, and how would you guide them? That's the same thing that we're trying to do. So we want to make sure that we have, that kind of what I call, it's not replacing the advisor, it's extending the advisor, it's extending that same approach on our platform, so that, they have, and at the same time, like, we may work it in such a way that it's kind of like, oh, we see that Brian is the advisor on your plan. He's the one that can ungate it so you can get 10%. Some advisors are like, nah, I don't know if I want to be involved in that level. But others are like, no, I would love that, because that's an opportunity for this participant to reach out to me, and I can have conversations and say, hey, like, like, you shouldn't be doing a lot of certain types of investing, until you have the basics covered. Like, do you have life insurance? Like, do you have this? Do you have that? And so this is an opportunity for that financial advisor to go well beyond just the scope of what we're trying to accomplish with the 401k. So I think that, to us is the way that we're likely going to approach it. And at the same time, I think it's good because the last thing I want is for somebody to hear on CNN, some crypto bull like myself saying it's going to be at 100K by the end of the year, and he like whips out his phone. He's like, I can do that in 401go, and turn this into like kind of an impulse action. Investing should be disciplined. It should be something that you consider, something that you analyze, and the 401k space is not a place to be making kind of irrational impulse decisions.
Right, and the opportunity to make a fat finger trade and accidentally allocate 100% instead of 10%. I mean, we laugh, but it could happen. I mean, it could be an issue. What concerns me is about having like sort of a gated access or something like that, as it could, potentially from a plan sponsor point of view. We always have to look at this from the employer, and do they want to get involved in their employees coming up to them and saying, how come I can only get 10% into my crypto account? I really wish it was 15. Or is there anything we can do to, business owners, especially the small business owners that we're working with, they don't want to deal with that stuff. They don't want to. It might be better off for them to say, don't just put it in the plan. If they want to do that, they can do it outside the plan. We don't need that headache. We've got a 10-person bakery here. I don't have to be answering questions about why I only have 10% access into crypto. So you want to be careful with that.
Yeah, and that may be another way as well that we address it is, it can be a simple on and off switch in the back end where, if we have a business owner that's apprehensive about having something like that in their 401k or an advisor, we can just say off. Like, that's the beauty of the platform that we've built, is it allows us a lot of that flexibility. And, that most certainly is something that's going to be in there, because I know there's people that are like, heck no way. And we don't want to ruin those relationships. So again, for us, it's all about, let's build an environment as conducive as possible. And if something, causes enough angst with with an advisor or a small business owner that they would consider shutting down their 401k plan or going somewhere else, well, that's, we're losing. We don't have those individuals on our platform. I'm happy they're on a platform, but if they're on our platform, we have the ability to do a lot more, kind of in the grander scheme of things. And I think another thing too, and your kind of example of that one employee that was saving 50% of his income into the 401k, is it also shows kind of the shift with workers where, traditionally, like the two big metrics that, platforms or advisors or, somebody that's trying to make a recommendation on investments, they're looking at time horizon and risk tolerance. With a long time horizon and a high risk tolerance, you can expose that investor to more potential return, but also more risk. And I think there's a third component that is underutilized, and that's one that's a big factor for us, is really risk capacity. So, like that particular employee, if we were just using the data that we have through the 401k, we would assume, well, this employee is making, $30,000 a year, and he wants to save 50%. Well, number one, we'd probably be happy with that. But if he wanted to go and, have a really risky profile, we're like, well, you're not making a lot like this. You do know that this is for retirement. You should be maybe a little bit more conservative. What we don't know is that he's got another job, and that maybe, and who knows, because he's so financially, kind of keyed in at this young age or whatever, he may even own real estate or something like that. So he might have a lot of diversified, income that will come into play at retirement, that for him, his 401k could almost be like a playpen where, he's not as, it's not going to hurt him and his retirement outcomes if he, loses a little bit more in his 401k than maybe somebody that is 100% reliant on it. And so, that's something that we need to take into consideration as well. And that's, we're working on, we have some very creative ways that we can, start to integrate that into the 401go platform. And that's a big initiative for us, is how do we quantify this when we know there's a lot of income that's happening outside of traditional payroll. And so for us, that's going to be a big consideration. So, somebody that maybe has, like I know a lot of people that are, they're in retirement, and the reason they're a Walmart greeter is because they want to stay busy and they're friendly and they love their job, but they don't need the money. And maybe, if there was a 401k option, that they would just be like, look, I really don't need this money. I'll just, kind of have fun with this. Do we want to prevent that person from doing what they want with that 401k? So you're right. I mean, there's a lot that we have to consider. And again, another reason why I feel that, with fintech, you can't just say, advisors only have friction, let's get rid of them. I'm saying that's why it's so much more important that we have them, is because now I think there's far more decisions that need to be made. There's far more that needs to be in consideration than there was 20 years ago. 20 years ago, you can make the assumption somebody's going to stick with an employer for, 10, 20 years, maybe an entire, their entire career or whatever, that there may be a pension involved, that there's going to be Social Security. Like, that's all changing. And, when there's that many more variables, like that to me shows, again, just the value of having somebody that can really factor all those in. And, nothing can replace, kind of like I said, that human element, and really making sure that they understand exactly, the full situation. We don't have algorithms that are at that level yet, and I don't think, don't get me started on AI. I don't think that's something else that is a threat that anybody should be worried about in the near future.
Well, yeah, it goes along the same lines as sort of a pet peeve that I have in the industry, is the idea of a risk tolerance questionnaire. To me, that's always been kind of backwards. It's our job to guide them and tell them how to invest. If I give a 22-year-old a risk tolerance questionnaire and it comes back that they should be 100% invested in a stable value fund, well, it would be fiduciary irresponsible for me to actually execute what they want. It's my job to sort of move them along in the process and say, well, if you can't be in that for 40 years, that's not going to work out the way you want it to. So it's our job to sort of tell them. And I always sort of joke around and give them the doctor analogy. If the doctor tells you need a surgery and you tell them, well, I have a low pain tolerance, I'm not going to do that surgery. Well, it's the doctor's job to provide the advice in the same way it's our job to.
Yes.
We don't necessarily take the dictation from the client. Obviously, we execute their wishes, but it's our job to guide them through the process, not to just say, okay, you're 22 and you're conservative, here's your stable value fund.
Yeah.
Because that's not the right thing to do either. Then at that point, you're just an order taker. You're not doing your job as an advisor. It's the same sort of thing.
You bring up a very good point. And again, these are all some of the big limitations of technology, where a lot of kind of our fintech peers at this point, they have their finger in their ears and they're like, no, not true, not listening. So, I agree 100%. We have to, that's again why the human element is so important, and we have to find ways to incorporate that. And so for us, the big thing is too, if we could take a lot of the heavy lifting off of the advisor's shoulders to where they're not dealing with a lot of these administrative hassles and, handling rollovers and everything else. If we can do that with a platform, then guess what? That frees the advisor up to do what they do best, and that's working with savers and helping them make very informed decisions and build these positive behaviors that are going to serve them well through life. So I honestly I had a very frugal upbringing, so I don't think investing happened in my family. I know my father had a 401k, but I knew nothing about honestly credit cards, checking accounts, and everything like that, just because we had very limited financial means. And so it was impossible for them to give me that kind of exposure. And I received nothing in high school. So the first kind of exposure to, financial education was a course that I took, I think my first or second year in college. That was just a personal finance course. And I remember, very distinctly, a group of advisors. They were actually Northwestern Mutual advisors that came in and just had a conversation with the class and talked about, this basically financial wellness. And the one thing they said is you can forget everything that we said, but the one thing that's going to bother us is if you don't go home right now and today figure out how much you're going to save each month. And do that now when you're 19, 20, out of college, right out of high school. And I did just that very same day. I went and opened up an account. I don't remember where, and I determined I'm going to save right now, even though I'm a starving student, I can figure out a way to save $20 a month. So it's just a little bit more peanut butter and jelly sandwiches, or cans of chili or whatever. But so be it. I saw the benefit of that. But had I not taken that course or whatever, I certainly wouldn't be where I am today. I mean, it probably would have came at another stage. But to me, it's important that you instill that behavior as soon as you possibly can, because that's something that I never wavered from. I've gone through, times where I did really well and times where like I was on the verge of bankruptcy. As an entrepreneur, that's just life. and during those times, like regardless, I always continued to save for retirement, whether it was an IRA account or whatever it was. I found ways of setting aside some amount of money, just to maintain that positive behavior and continue on that path. And it served me very well in life. And some of those behaviors extended well beyond even just the way that I conduct business and the way that I look at risk and I analyze everything else, were those saving behaviors that began with a personal finance course in college. So to me, I see what we're doing, and I mean we as us as a platform, and you as a financial advisor, and providing a way of accessing more savers, is we have the ability to impact that change. It's not, let's find a way to save Social Security. My philosophy is, let's find a way to get people saving for retirement and thinking about it themselves. Doesn't mean that we can't fix Social Security or there's other things that we couldn't do, but let's not just find ways to shift more responsibility off of those individuals. Let's give them that responsibility and enable them to take matters into their own hands.
Yeah, and it's amazing when you're out and you read some of these surveys or you're talking to the next generation of workers, how many of them look for this type of service through their employer, right? Yep. So they're expecting their employer to provide certain things, not just a 401k, but financial wellness, financial education, any size company. It doesn't have to be a mega conglomerate. I mean, they're looking for it. They expect certain things other than salary from their employer. So it's important to get that message to the owners and the HR folks who are trying to now bridge that. We hear it's so hard to find good employees, or any employees really at this point. So many people are trying to hire folks and they just can't find it. But there does seem to be that disconnect of what's expected of employers versus what employers are providing.
Yeah. Well, and my opinion on that is, shifted drastically kind of over the course of my career. I know with some of the, the first companies that I started, a while back, and the employees that I hired, I kind of had this mindset that, I'd say is kind of a very pure economist mindset, because you talk to a lot of economists and you say, should businesses be in the, in the benefit space? And they're like, no, businesses should just pay employees what they're worth, and then they go figure that out on their own. And I kind of had that same, view of, I'm just going to pay you better and you go figure this stuff out on your own. Like, why should I be in the space of trying to figure out healthcare and 401ks and everything else for you? And so I tried to simplify the transaction, because that a lot of times that's the way economists view things, is like, the simplest form is oftentimes the best. But over the course of, having multiple businesses and working with employees and everything else, and, from day one, I've always viewed, kind of the companies that I've been involved in, the people that I work with, more as family than anything. And I think that's not, that's very common in small businesses. And so as I, kind of, I think had a wake up call more than anything, I realized, no, people really need this help from their employer, because they're not going to do it on their own, because outside of their job, they've got lives, they've got busy things, they have recreation and everything else. And if this is something that I can help them with, then like this is again value that I'm adding to my family, to my coworkers. Right. And so over time, like I'm even of the mindset now where I'm looking at, the benefits that we have at 401go, and the team that I get to work with here. And I think mental health benefits, I think, even like having some, not just PTO or paid vacation or whatever, but actually like a vacation benefit where employees can save a little bit of money for a vacation, and we're going to match it, because I want to ensure that, I understand the importance of taking a vacation, of pausing to sharpen the saw. And so these are all things that I understand the importance of employees that are financially sound, so they're not desperate about their paycheck, and when they're at work, they're thinking about, I've got a car payment and this and everything else. And so, if I can free them from a lot of those burdens, and if I can help them, number one, that's what I want to do, because I care about these people beyond just the economic output that they're providing. But number two, it's in my best interest for the economic output that they're providing, because if they're happy, if things are in order, if they're healthy, if they're financially sound, then I worry less about potential fraud. I worry less about, because anytime you hear of somebody siphoning off funds, it never starts with malintent. It never started because I hated my employer or something like that. It's usually because, I had some rough times and I just figured out if I just pulled a little bit of money out of the till, I figured the owner wouldn't care. I'd be able to pay the babysitter that I had to, and then I'd replace it next week. And, goes from, I mean, that's not a somewhat innocent interaction to, being like later on you realize that this, person siphoned off $50,000 from the small company and is now in jail or whatever. So, and that happened because there wasn't, financial wellness in that individual's life. So, for us, we see that there's tremendous benefits, and it's something that I've, certainly learned as a small business owner and operator, is that benefits are crucial, and that's healthcare benefits, and that's financial wellness, and that's education, and that's just, providing a good, like, it's no longer work from 9 to 5. Like, people talk about work balance. It's like, making sure that when you're home, you're home. And to me, it's all together. Like, I'm on vacation, but I'm still taking time for work, and I'm at home, but I'm still taking time for work, but I'm at work and I'm still taking time for home. My, my kids call me and I have a conversation. I'll say, I'm at work, this is work time. Like, it's all blended. And so why shouldn't we, be taking care of more of these things that might not be considered just pure work benefits, with the employer? So I'm a huge advocate of benefits beyond just the attract, retain, side of the benefit space, or just like, let's make sure we check a box so we can, compete with the talent or whatever, because it's a competitive landscape. And if there's high unemployment, I'm just going to scrap all these benefits because people are desperate for jobs. Like, that's honestly not the way most small business owners think, is what I've found.
Yeah, that's good. As we wrap this up, I'm in Connecticut, which is going through an enormous amount of rainfall right now. I think it's rained every day in the month. And I'm watching behind you, Dan. I'm watching the sun kind of go in and out. And every time it gets sunny, I'm so disappointed because I know that you need the rain so much.
We actually got like a little bit today, but I mean, here in Utah, rain like comes for 5 minutes, and some of the time it can be a ton, and oftentimes it's just a little sprinkling. So send some of your rain our way.
I'll try. So 401 Go, quickly, how would people find out more about your company and learn about how to set up a 401k plan there?
Yeah, the best thing is just to go to 401go.com. And we make it very easy to contact us once you get there. So, there's chats, there's phone numbers, there's, forms you can fill out, and we'll certainly be in touch. So, yeah, and often, that's the other thing too, is like, we're not stingy about, the information, the education, and everything else. We have to be careful, the way that we're kind of regulated by the SEC about the types of information we can give. So don't call me and say, hey, I hear that, interest rates may be doing this or whatever, like, what should I invest in? I'm going to say, I think you should talk to Brian.
Yeah, so,
right. But at the same time, like, I love talking to small business owners. Like, that's the most rewarding part of my job, and just finding out what it is they do and why they want to set up a 401k. And we see a lot of generosity. We see a lot of, of amazing things happening in the small business space. And so I love those interactions. Please reach out, and let's chat.
I was laughing the other day. I was on your website, and the little pop-up messenger thing was called a GoBot. I got a kick out of that because I had a few GoBots as a youngster, so I remember back to those little toys. So that made me
I'm
laugh.
Good. Someone picked up on that.
Yeah. Yep. All over it. All right. Thanks, Dan. I appreciate your time.
Thank you. It was fun. Appreciate it. See ya.